This sheet over here is the financial statement sheet. You'll be using this for any ratio questions you come across. Over here we've gathered every single calculation they've shown, such as return on equity, gross profit, net profit margin. We've got the turnover ratios down here, liquidity calculations. So every calculation that you may come across has been included here. Then what we've done is we've set up a table over here. You're going to receive a template like this in the exam. All you have to do is copy your values into the tables here. So you'll see each one I've just typed in manually, and then this is a calculation of these two added together. Same as this. And over here we've got a summary of all ratio questions asked in past papers, so you'll see the most common ones. The ones that stand out are the operating profit margin. We've got these over here. The debt to equity has come up in every single paper, so it's important to focus on those ones. Then over here you get this table here. This is a copy of the information here, just neatly put in a summary table. You'll see share price over here is highlighted. This value must be inserted yourself, as this can change. Then we've also got a table down here for your averages. Now there is no set average in each question. It can change on what they ask, such as trade receivables, assets, inventory. So you just have to be mindful and input your values here. So if this were to change to 150, you'll see this will update. So if you do get two values and they ask for the average, you have to input it here and use that in your formula instead. But on the table here, we'll see that the top one over here was operating profit margin. So we'll find that one over here. Here's the formula, operating profit over revenue. And you'll see the answer comes out at 78.22. This is because it's already linked to your revenue over here and your operating profit down here. This is how it works for each and every one of them over here. If they do ask for an average, you can just input that yourself by taking, say, total assets and total debt. If they ask for average total, you just do total debt divide by average assets over here. Another commonly one asked is over here, your debt to equity ratio. Over here you'll see the answer is 0.1. All we've done here is added the total debts, which is your non-current and current liability debts, added that together, and then there is your total equity value. Enter that in and you'll get 0.1, which is the answer over here. This is how it works for all of them. It's very simple. Everything is calculated for you. All you need to do is make sure that you input these values over here correctly, as that impacts all the other calculations.